us to do.
Mm-hmm. And I suppose, Neil, one of the points on the website is it states that it's not just Kindred driving this forward themselves. It's much about the cooperation side of things. And how has that fared? Has that been quite easy to start off with? Has that proved its challenges? Is the different opportunities that are coming out from that as well?
Yes, it's a good question because ultimately there is no point in us getting to 0% by pushing problems elsewhere. As a whole, the industry needs to be getting to 0%, and I think that the critical thing there is that it does require cooperation. So it requires a lot of cooperation between operators, and I think you're seeing more and more of this happening. I think in the UK. The Betting and Gaming Council has been a really effective vehicle to bring the big operators together and find areas to align on and to create sort of harmonisation around higher standards. So I think that's one area, and I think there's more to do to explore the ways that single customer view is quite a big topic. There's obviously some challenges and some things that need to be worked through around data and sharing, etc. On that, but that can be an enabler. But I think as well, it's important that this isn't just seen as an operator initiative. Clearly, the operators can cooperate a lot together, but we need to see cooperation up and down the value chain. There's so much we could do working with banks and other payment providers, the gaming providers, the sort of the product side of things, marketing partners, affiliates, etc. So it's a whole ecosystem really that I think can unify behind a goal of 0%. Hopefully that's quite an easy thing for everyone to align behind, and ultimately we need to ensure that the way that the ecosystem works and how everything fits together really does enable us to get to the 0%. I think one good thing about the cooperation, and Maris has alluded to this, is for us really important that we improve our ability to detect risk, and we're really encouraging and we want researchers to come and help us to improve that. And then that's information that obviously can be shared and made public. And then also, as Maris has said, we do work with people with lived experience, and there's opportunity to do more of that to improve the effectiveness. So many different areas to generate good cooperation around, I think. We have some of that, but clearly we need more and more as the time rolls on.
Yeah, and how has that been driven internally from a Kindred point of view? Is that with different departments? Are they aligned along the similar sort of way, or is some catching up with others? How's that faring?
Yeah, I think it's one of the most encouraging things. I think is how we've seen a lot of alignment behind this goal internally. It's not so long ago, right, that you would have not necessarily battles between departments, but there was more conflict perhaps between the commercial areas of business and the compliance areas. And actually now what you see is there's significantly more harmony. Everyone is working towards the same goals. I work in the commercial teams. I'm responsible for growing our UK business, but we want to grow that business sustainably. We want that all of the revenue to be derived from behaviour that's not harmful. So it's impacting so many different things along our along all the commercial processes around acquiring customers and retaining customers, and that I think has enabled other areas of the business to actually more easily get initiatives that they've perhaps been driving in the past in silo to commercials actually be just part of the way that we try and position ourselves towards the customer and ensure that we minimise harm as best we can.
And Maris, from your point of view, the responsible gaming side of the training and all an element and all that, how's that faring up in this to this regard as well?
I think training is very important, especially as Neil mentioned, this wasn't always so easy. So we used to have clashes between departments because there was never enough alignment, perhaps, to what we needed to achieve. So training is key. And we do have different levels of training, which I would always suggest for any company to do. So not to just have a one size fits all. So we would have like online learning for everyone, but also specifically to your needs when it comes to, for example, customer interaction. We would have different levels. And again, I mean, they are the best advocates for this, but we also work a lot with experts by experience or lived experience, and they come and tell us their story. So, for example, we've had Epic come to the office and explain how someone went from being a professional rugby player to a problem gambler, explain these little steps and what he went through. And that really helps to humanize the situation as well, because sometimes you might have certain departments that might see a customer as a customer account number, whereas responsible gambling teams see a person. And as soon as you have that shift, you start seeing more buy-in into harm minimization. So it's just trying to push the agenda that, there should not be any exploitative gambling. There should be nothing that might hurt someone, rather than just looking into the numbers aspect of things.
And with regards to sort of touching back on the false positives, are you concerned about any false positives in order to get 0% revenue from harmful gambling?
Hopefully we wouldn't have that, but as much as possible, we're also over-reporting in that perspective. So whereas, for example, researchers tend to use self-exclusion as a proxy measure for problem gambling, self-exclusion is only used as part of the revenue from harmful gambling that we're reporting. So we're including as well any revenue that's coming from customers who have confirmed addiction. We're also reporting that if someone is showing high risk behaviors. So as much as possible, we're taking the same approach of a safer approach, more a wider approach. Better to over-report than to under-report, in my opinion.
Great, and just touching on advertising, I suppose, because we haven't done that yet. How does advertising play a role in this journey to zero, in your opinion, Neil? I suppose.
Yeah, I think it's got a crucial role to play, because I think that it's really important that brands are positioning themselves in a responsible and a sustainable way. And I think you see that increasingly now. If you don't have to rewind too far to go back to a time where advertising was very aggressive and very shouty on TV, and then you just tag on the end of the advert when the fun stops. Whereas now you see a lot more promotion of safer gambling messages and behaviours, both on TV and around sports sponsorship, etc., etc. So I think that the way that brands are positioning themselves has evolved to a much better place. But we think about this through the whole process. It's impacting the way that we appraise acquisition spend. Which channels, which sources are sending players and that are sustainable, and which ones are perhaps sending players that are more skewed at the higher end of the risk spectrum. It impacts the way that we our CRM logic works, and that's obviously a really crucial part of the gambling operator's business. And like I say, it's sort of now really truly embedded in the way that the commercial teams and the marketing teams think. I think there's a shift within, certainly within Kindred, and I think you can see clear evidence of this shift within other operators as well, where that these businesses really and the brands really want to be positioned as sustainable entertainment, because that's ultimately what gambling is supposed to be, and for the vast majority of people, that's what it is. And I think that part of this, from my perspective, is almost making sure that we change the way that marketing feeds into everything to ensure that is how that's how we portray ourselves, and we do so much work behind the scenes then to ensure that is then truly the case. So I think marketing's critical role in this, and I think you're starting to see positive signs on that front.
And I suppose one final question before we go. I mean, today's sessions have all been about sort of the link between iGaming and investment. Has the stock market sort of rewarded Kindred Group, for these initiatives that you're implementing? Have you seen a shift in that at all?
I think that generally what investors want to see, certainly the European investors, is businesses that are taking sustainability very seriously. Clearly, if there's ever cases where something has gone wrong and a customer has maybe spent a lot of money through harm, that's clearly no benefit to anyone, really. That's incredibly negative news for a PLC. And that's why there's so much focus on ensuring that doesn't happen. But for a business like Kindred, the big shareholders essentially are investment houses who have their own criteria around which stocks they can invest in. So for us, it's really important to make sure that we set ourselves a very high bar, and we stay operating at that bar, and ensure that our stock is available and is appealing to as many investors as possible. So I think you would like to think that ultimately like I say, that whole ecosystem that starts with the investors to some extent incentivizes and rewards getting to 0%.
Great. Thank you both. I think we've run out of time now. So some really insightful questions and answers there. So thank you very much for both your help, your time today, Maris, Neil. Thank you very much.
Thank you.
2020 brought about the change of a generation. The convenient, the predictable, the status quo, all disrupted. The true nature of the iGaming industry was revealed. Resilient, responsible, and creative. This October, it's time to lead the industry forward and redefine our relationship with each other and the wider investment and tech industries. Join us in the majestic World Heritage City of Valletta for disrupting the status quo.
It's our industry, it's our time, the future is ours.
This is iGaming Next 2021.
All right, we are live.
I think it comes down to doing what's right for the customer, which everybody can do. I mean, but the feeling, the entertainment, the social features, the content value is there.
Picture everything from hot potato conversations to the latest in-depth industry insights at your fingertips. iGamingNext.tv aggregates all of our thought-provoking content into one centralized and intuitive platform. What's more, filter through with ease, allowing you to stay at the cutting edge of the industry.
Value added, but they can also decrease costs and increase security.
Visit iGamingNext.tv. Brought about the change of a generation. The convenient, the predictable, the status quo, all disrupted. The true nature of the iGaming industry was revealed. Resilient, responsible, and creative. This October, it's time to lead the industry forward and redefine our relationship with each other and the wider investment and tech industries. Join us in the majestic World Heritage City of Valletta for disrupting the status quo.
It's our industry, it's our time, the future is ours.
This is iGaming Next 2021.
All right, we are live.
I think it comes down to doing what's right for the customer, which everybody can do. I mean, but the feeling, the entertainment, the social features, the content value is there.
Ideas start with an impulse, a desire of a notion. urge to create something extraordinary. Get your project started. iPoint International.
Okay, hello everyone. My name is Michael Polo and I'm the moderator of this panel on the future of investments in the iGaming industry. So my relevant background for this is that I was one of the co-founders of the online casino Mr. Green back in 2007. And I was also the first CEO of the same company, taking it from a Word document to a listed company. Quite a ride, so to speak. And Mr. Green was eventually acquired by William Hill. After that, I've been an angel investor with investments in some 30 startups. And I also co-founded and was the CEO of a company doing automated accounting called Red Flag that merged with our competitor Bookio just last year during the pandemic. Quite interesting to do a merger during the pandemic, I can tell you. But that's not the subject for today. Today we're going to talk iGaming investments. And I personally today hold no active positions in iGaming. So I guess you can view me as a very impartial moderator today. Before we start, I want to stress the fact that we will not be giving investment advice today. All information and thoughts are provided as is, and it does not represent any investment advice, tax, legal, or otherwise advice to you. If you want to invest in the sector, you need to carry out your own investigations. Neither the panel nor myself will entice you to buy or sell any securities based on today's conversation. And Thomas, I know from a regulatory perspective, you're obliged to, before we introduce you, you're obliged to say a few words in this matter as well.
Yeah, I just have to say, for important disclosures, please see the Morgan Stanley Research Disclosure website at www.morganstanley.com/research disclosures. Okay,
thank you, Thomas. There is no better content online than getting URLs read out loud. So with this stellar start, I just want to give you some background here. If you look at the development of the iGaming industry, we have witnessed an enormous growth the last 10 years. We're talking more than 100% growth in most jurisdictions. And also, I would say, a professionalization of the industry as such. When I started out back in 2007, you would have to fight your way to find a guy in a suit at all, so to speak. And what was once just a tumbling ground for opportunists, sort of a Wild West, has now become a professionalized industry with major efforts in sustainability and efforts to avoid harming clients, etc. And the business has gone global, and we also have a new regulatory landscape. These are some of the things we're going to discuss today, and if the meteoric rise can continue and what to look for in investing in the area. For this today, I've help from Thomas and Andreas joining me. Thomas Allen is a managing director at Morgan Stanley, where he heads up its US gaming, lodging and leisure equity research coverage. He has been at Morgan Stanley focusing on the gaming space for around 15 years now. So you've been around, Thomas. We also have Andreas Ohn. I hope I'm pronouncing that roughly right now because he's from Denmark and I'm from Sweden. So we have kind of a thing going on between Sweden and Denmark. So any mispronunciation is, of course, not by accident. But anyway, Andreas is the CEO and founder of Symmetry Invest, which is a Danish-based long-short equity fund investing globally. And iGaming has been a core focus for them, as Andreas' portfolio manager has worked in the industry for some 10 years, and the fund is actually seeded by the founders of Better Collective. So that's where we are. We have about 20 minutes now due to some delays today, so we're going to do this in a fast moving pace. So brace yourself now, everyone. But just as a warm-up, do you have any favorite companies right now, Andreas?
Yeah, so we like the suppliers like Evo, Cambi, Betco in the industry, but I would say our favorite name is Gaming Innovation Group, as we have written on our website also. So we think they are structurally really well positioned now, and it's a much better kind of risk reward at only 6 times next year's EBITDA. And as you know, they are strong in affiliation.
75.
No, not 75 as in the US. So I think they are quite strong in affiliation, also on the platform side to kind of win in the regulated markets.
Okay, Thomas, do you have any favorites?
So we're generally bullish to U.S. sports betting and iGaming opportunity, and we're overweight DraftKings, MGM, Caesars, Boyd, partially win on the thesis. If I had to highlight one here, I'd probably call it Caesars, because when we look at the 2022 valuation, they're trading in line with historical averages when a lot of the other stocks already have a decent amount of value in the stocks. And so, it's this company that hasn't really done that well on market share yet in the US, but they have many of the things that should drive market share in the future. And so we think that that's, something that will be valued by investors in the future.
Is the merger or acquisition of William Hill done yet for Caesars?
Yes, it is. So that's a key catalyst. It will hopefully help them to execute better and to start taking market share.
Fantastic. So if we want to start with sort of let's say, it's not a trick question, but it's a quite tough question. I'm going to pose it to you first, Thomas, so you get a breather, Andreas. What matters the most, revenue or profits?
Depends if we're talking about short-term or long-term, right? I think long-term profits are really going to matter. And I that's a debate within the industry where, it's interesting because if we go, I'd say the past 6 months or maybe even shorter, the investment community has really started to focus on profits, whereas before it was all about revenues. I think that there's still a lot of investors who haven't invested in this space and I'm talking about the US market specifically, because they think it will never be profitable, at least for a B2C perspective. We disagree with them. We highlight there are, dozens of companies or hundreds of companies all over the world that do this business and are highly profitable. And we don't see the unique market characteristics of the US, like market access fees or anything like that, as actually that big of a deal. And one of the things that the US companies have that I think are really attractive for long-term profitability is customer acquisition advantages, right? So the legacy casino companies have big casino databases, but more importantly, the DFS companies have large DFS databases that have really proven to be very good acquisition grounds for customers.
Okay, and if I pose the same question to you, Andreas, I have some follow-up questions to that, but first, Andreas, I'm going to give you the chance to get in here.
Yeah, I would say the most important part is actually in the middle. It's unit economics. So if you have good unit economics in one place and you can take them to other places, that's definitely the best thing when you have reinvesting opportunities. So just 2 good examples from our portfolio. So we are long in both Cambi and in Gaming Innovation Group, and those 2 companies invested heavily in technology, in new markets, and in getting their platform licensed. And everyone was kind of questioning them that, this business will never scale. And now suddenly they took their margins from 10, 15 to 40, 50% now. So at least if you can find those companies with good underlying unit economics that will scale at a later point, then I think it's really good.
Thomas, you're focusing a lot on the US market, which is interesting. Judging from what you were saying before, revenue or profits, do you think the B2C operators in the US will ever become profitable? And if so, if they become profitable, will they be more or less profitable than the international operators?
So I do think they'll become profitable. I mean, I don't think we have any of our companies profitable really until 2024. Remember, in the US, it's a state-by-state rollout. So every market is every state is its own market. So that means that as soon as maybe you're profitable in New Jersey, where a couple of companies already are, you're heavily investing in a market like Illinois, and that'll keep on going until most of the large states have legalized. But we do think that they'll be profitable. I think that they're going to be relatively comparable to the European and Australian companies, as I pointed out earlier. their offsets, right? So in certain markets, in certain instances, the U.S. taxes are higher. Certain instances are lower. Certain instances they have a better customer acquisition advantage. Certain instances they have a worse. So in general, we kind of use the international markets and companies as benchmarks.
Okay, cool. Andreas, how do you see companies today, and maybe this is more relevant for operators than suppliers, differentiate themselves from each other?
The theme we have benefited most from is basically that all the big US, operators need to buy the software from Europeans that trade at a much lower valuation and is much more profitable. So, they buy Sportsbook from Kambi, affiliation platform from Geek, and casino games from Evolution. So you have like really profitable, fast-growing European companies that basically benefit from all the money, easy money that is in the US now. So we think that's a quite good theme. On the operator side, we think a company like Kindred is one of the most interesting because they kind of take the long-term approach in Europe. They have invested like many years in UK, for example, and now they're suddenly starting to take a lot of market share when regulations get a little more tough.
Yeah, and you mentioned there's a lot of free money, so to speak, in the US available. And Thomas, do you agree? I mean, from a public side, what kind of investors are focusing on the opportunity in the US?
Yeah, I think Andreas was really talking about how much money the operators are spending, right, Andreas? I mean, that they're willing to spend whatever to acquire customers, and I agree with that. But I think, and I'd love to get your two opinion, but this is an early land grab, right? And they're willing to spend whatever. And I look at a company like DraftKings that, I kind of think of takes like the scorched earth approach, where they want to just make sure that they have as many potential touch point consumers in order to, drive their long-term market share and get in this early. From an investor standpoint, look, it's been pretty amazing. As you mentioned, I've been covering the gaming space off and on in the US for 15 years now. And over the past 2 years, I've never seen this much of an influx of other investors, not standalone gaming or standalone consumer investors, but other investors look at the space. And the amount of, I probably spend more time on the phone with internet and media investors today than I do with gaming investors, just given how attractive this opportunity is.
Fantastic. And you mentioned a land grab going on in the US right now. Andreas, how do you see, I mean, following a land grab, we should see some consolidation. And we already seen the start of this in Europe. How do you see the consolidation race going on going forward? And this has been sort of an issue. As I said, I started in the iGaming space in 2007, and this has been sort of next year the major consolidation is going to happen. I've heard it every year since 2007. But where do you think we are right now?
Yeah, so I see from 2 points that we take, a lot of focus on the consolidation space. One is in affiliation, where we can see that in regulated markets, the operators only want to work with really the big affiliate companies. So, back in the days when you started in the business, it was easy for two guys in a garage to build a website and send traffic to an operator. But now, due to all the compliance things that, affiliates can really roll up this industry and become much bigger. And then the thing we are mostly focused about with the US is kind of the US companies have the focus of wanting to own their own technology. Whereas like in Europe, it's much more normal to kind of outsource the platform, outsource the casino games, the sports book. So we kind of want to kind of figure out, where does the European players be affected of this changes.
Andreas, why do you think that is?
I think it's just something is just like US mentality, and we have seen at least in the first 2-3 years now since PASPA that investors really like when companies in the US can go out and say, "Oh, we own our own technology," even through the technology maybe it's not that good. Just to say that, you get a premium in a share price, and then you can raise money on that premium. So I think at least our point is that at some point, what you will win in this industry is either have the best brand or the best product. You will not win by have the best marketing, the most marketing in the short term.
You could, of course, be the best at M&A also. That could be a third play, I think.
Yeah.
Thomas, would you like to chime in on the consolidation race?
Yeah, look, I mean, we think that there'll be more consolidation for sure. I mean, if you look at Australia as a good comp, you know, the UK with with the two large kind of conglomerates there. Generally, we're expecting that at least on the sports betting side, the U.S. market will have 5 players who have about 90% market share. That means there are going to be a lot of smaller players that will either go away or get consolidated into bigger players. And so, you know, we think it goes back to my earlier point, which because the US is a state by state rollout, it's going to take a lot longer to profitability than another market. And so there are going to be certain, you know, very well capitalized companies that can continue to do that, while others, it could potentially make more sense to be part of a bigger network.
Okay, cool. A different issue that's becoming more and more common and prevalent in the gaming space specifically, and investing in gaming space, is of course ESG. How do we keep an eye on it, both from a company perspective, but also regarding flow of funds? Andreas, would you like to try to attack this quite tough question?
Yeah, so we have basically 2 focus, and one thing is that how should we brand, you know, ourselves as a fund doing, you know, iGaming investments. And basically our approach here has been to always say, like, you know, when we buy an iGaming stock, do they work to, you know, to make the industry better or worse? So basically if the company we buy went away, would the industry be better or worse? So we only try to buy companies that we actually think are going to improve the ESG in the business. The other topic is that we of course look at kind of you know, fund flows in businesses. So what we could see a few years back in some of the companies we followed was that a lot of the Swedish institutions were forced to sell out of the stocks. So there we of course need to follow that kind of money flow to know when to, you know, add or reduce our positions.
But now some of them needs to repurchase the stock due to the companies becoming so big, so they become parts of the indexes. So we'll see.
Things that now we see this Roundhill Bets ETF in the US that is actually forced buyer of the European names. So now it's kind of reversing a little bit.
Yeah, Thomas, what's your view on ESG?
Look, I think the U.S. industry needs to be aware of it and to be focused. I mean, the thing that I focus the most on is problem gambling and avoiding minors from gambling. And I think one of the good things about the U.S. Structure is, for the most part, they're siloing the retail licenses. So unlike in other developed markets where you have retail shops and children are walking down the street and they're like, "Mom, what's that over there?" You know, in the U.S., it's mostly going to be siloed to, you know, physical casinos, or in some cases to arenas. Also, the U.S., I think, has already gone down the path of, you know, we're not going to have the type of kit sponsorship that you have in Europe, which I think will also help kind of avoid, you know, avoid getting the branding too far out into minors and really pushing problem gamblers as much. But I do think that it's an important topic, and there's still a lot of things that the industry really needs to be focused on to make sure that that it holds up to best ESG practices.
The legal age is 21 in US, right? It's 18 in Europe, so to bet. So that's also different.
Yeah, that's true. And I guess one issue will be to actually also be able to at the same time look at problem gaming or gambling and try to grow aggressively. I mean, the most successful companies will probably be the ones who can do both at the same time, because some are really good at sort of avoiding problem gambling, but they're not so good in growth. And we haven't seen that many examples on companies being able to do both. Do you see any such companies that could be role models, Andreas? Okay, Thomas, you start.
I think the industry should be coming together, and I know, for example, GeoComply is working hard to bring operators together to really focus on this and to kind of pool resources to make sure that the industry is going to go down the right path.
Okay.
Yeah, Andreas. So I would say like there's also difference, Thomas, in the US where regulators are quite taking a hard stance at these things, where in Europe, in some countries, you know, the regulators don't focus a lot of the cannibalization, etc. Whereas a company, as I said before, that we like that do the right thing is Kindred. Like, they took a margin loss in UK and now invested for the long term, and now they are willing in the UK. They took a big hit in Sweden when it regulated, but now they are really taking market share in Sweden, and I think they will do the same thing in Netherlands now. So I think that the companies that is actually willing to take a short-term hit to do the right thing long-term will be able to win it.
Yeah, and I think Kindred specifically made some major changes even like 10 years ago to be prepared for this. Specifically, they started out in France trying to be compliant very early on before this was even an issue. So pretty well played there, I guess. Speaking of regulatory changes, how do you as investors monitor what's going on and the impact it will have on companies? Thomas?
A lot of reading is the most direct answer. We subscribe to a lot of news articles, gambling compliance, Mixer gambling compliance, Fantini, Alan Wojcicki, the Legal Sports Report. So we read a lot. We also look when there's something going on, we reach out to the regulators or the lawmakers and try and figure out what's going on there to get their own opinions. So it's heavy lifting, but I think that's a key kind of value that we provide for the broader investment community. Because look, if you're not a fund that's fully focused on this topic, you're probably not going to be as in the weeds as we are on this.
Right, Andreas, heavy lifting, is that the recipe here?
Yeah, so we talk a lot with the companies. We do expert calls with industry experts to kind of see where the trend is going, and then we kind of focus a lot of what companies will benefit from regulation. So as I said, like a company like Gaming Innovation Group, they do they have a lot of PPC business in affiliation where they can do Facebook, Google advertising. You can only do that in regulated markets. So basically, like 2 years ago, they were only in 3 markets, and now I think they're in 10 markets with PPC. So they're growing like 100% a year in the PPC business. So I think that if you can kind of identify the companies that will actually benefit from regulation and position yourself in advance of this, then you should be able to do well.
We host a call with a public policy expert every single month to just be on top of it, because the U.S. market is changing so quickly that it's important to stay on top of.
And Thomas, if you look at the U.S. market specifically, what kind of returns do you expect in this sector going forward?
So good question, right? Because look, how do you really think about returns when a lot of these businesses are coming from like an omni-channel approach, right? They're taking existing assets and they're investing in them to then generate returns in the future. What are we thinking? Look, we're thinking 25% EBITDA margins on a $15 billion revenue market. And so it's good returns. Look, I mean, for certain companies, yes, they're investing hundreds of millions of dollars today. But like I think about a DraftKings, for example, we have them losing, $500-600 million of EBITDA the next few years, but then, come down the road making over $1 billion of EBITDA a year. So very, very high return.
And Andreas, what's your view on this?
Get the question totally.
Sorry, what kind of returns do you expect going forward now?
Yeah, so that's the tough one, because it has been like amazing ride here for the last few years. So yeah, a fund return is 20% growth. So we wouldn't invest in, we don't need to invest in iGaming. So if we can't find that kind of returns in iGaming, we would just find it somewhere else. But we still think we can at the moment.
Okay, great. So 2 quick final questions then for today's panel. First, just one that I'm a bit interested in myself. Where do you see the intersection of crypto and iGaming? Anything to look for there? Thomas, if we start with you.
I'll pass it on, Andreas. I that's beyond me.
Yeah, Andreas, are you more into the new tech stuff than the Morgan Stanley guy?
I was maybe I'm a little younger, but I would say crypto is not something I'm really good at. What I've seen so far, what I hear from kind of the experts we talk to, is that crypto is still more getting used to kind of circumvent the regulation in Europe. So kind of like companies kind of say, okay, if you can transfer Bitcoin to me, I can put some money into your bank account in an unregulated manner there. So yeah, I think it's more as a place that is getting used to kind of circumvent regulation, not to benefit from it, at least at the short term.
Okay, cool. Final question then. What is the biggest caveat going forward? Thomas, what should we be afraid of?
Yeah, look, I mean, I think that the international, so again, focused on the US, I think the international markets set the framework for what you should be, what ones could be afraid of, which is like higher regulations and the industry potentially going too far on attracting problem gamblers and public perception going against the industry. I think the industry so far is in such a growth mode that that's not an issue, but I just think that the industry has to be smart about growth to not make regulators worried about what's going on.
Andreas.
Yeah, I would say that, as I said before, we are mostly focused on the suppliers. So what we are really focused on now is kind of, as Thomas said, if there only be like 3 big companies in the US that will kind of have everything in-house, then it would be maybe a little problem for the suppliers. So that is something we kind of want to monitor quite closely, how that plays out.
Okay, very interesting. Thank you so much. Do you want to add something, or I know you need to run now, Thomas, for the next event?
No, thank you very much.
Okay, thanks for participating, and thanks for the patience listening to this. I hope you got some information that was not investment advice. Okay, thanks everyone. Bye.
Bye.
You posted about this the other day, the fact of the proposed takeover of MGM Studios by Amazon. I know it's not directly related to gambling, but it's a quite interesting subject still what's going on in the wider tech world. So
yeah, it's been confirmed. It's been confirmed this morning, the transaction. I think it's super interesting because it just gives, I think the MGM Studios, not everybody maybe knows what kind of IP they own, but they do own the James Bond IP, the Handmaid's Tale, and many other ones. So I think it just is a very aggressive move from Amazon against Netflix. And this at the same time, I also read yesterday that Disney is canceling 30 of their cable channels after canceling 20 cable channels last year. So this just shows you that, I mean, the TV battle is over now. It's all about the streaming battle, and those kind of moves are showing you also the kind of money that sits, that you really do need IP to become competitive between those players. And Netflix, when I did the presentation around streaming 2 years ago, Netflix was so far ahead, and it isn't the case anymore. And another interesting bit around this subject was that Netflix announced interest into moving into video games. So, we all know in our industry how important IP is when it comes to game promotion. If you imagine, the battle between Amazon and Netflix on video games and applying some of their crazy IP that they own, it really makes it really shakes things up.
Start with an impulse.
Afternoon, everybody. Welcome to the latest panel for iGaming Next. This one, eliminating the gambling stigma. Hopefully you've all been listening in today. There's already been quite a lot of chat around issues around actions to do with ESG. And this one will this panel is designed to take on some of those questions head on. I've got with me a very good panel. We've got Elizabeth Oost, the Sustainability Manager from Aspire Global, and we have Kelly Perry, who is the ESG genius at Edison Investment. So let's get straight on to the top question, I guess, is a general one that I'm going to aim first to you, Kelly, because much of the chat today has been about how ESG affects the gambling sector. But I guess I want to somewhat take it back just one step, which is to ask, why has ESG risen to prominence generally? What is it about companies that have strong ESG principles that appeals to their investors?
Yeah, first of all, thanks everybody for inviting me along to be on this panel. Great to be here. And I've heard that it's a great conference so far. So thank you again for having us. Look, I think ESG has, it's not new. It's been around for many years now. And, investors have been voicing their concerns around sustainability for several decades. But actually, you might look at 2020 and 2021 as the coming of age for ESG. And that's for many reasons. I mean, there are a couple of drivers of why this is important now, and I'm sure Lisbeth Aspire will be able to sort of attest to this. But you've got things like the new regulations that are coming in. Without chucking too many acronyms at you, we've got SFDR and NFDR. These are sort of mandatory regulations that are SFDR applies to all financial market participants, and NFDR applies to the larger companies, sort of 500 plus employees, about their non-financial information disclosure. These regulations are coming in, they're mandatory. They're the ones that are going to be driving the importance of ESG to businesses. You've also got government policies coming into play, which can't be ignored. Globally, this is obviously recuperating from the pandemic and how they're responding. You've got the Build Back Better initiatives across the globe from governments, and France has allocated 100 billion in their rescue package, with 30 billion of that being allocated to earmarked for green hydrogen, for example, cycling and rail links, retrofitting of buildings. So you've got the government drivers, you've got the policies, and you've also got sort of the developments on the institutional investor side. So that includes, 80% of investors now are including ESG considerations into their investment decisions, and they're building their own different groups and networks in order to push and drive sustainability. And they also have a commitment to net zero targets as well. And then ultimately, as a result of all these changes and these drivers, you're then seeing a shift in the fund allocation globally. So around 40 trillion assets under management are now falling into ESG portfolios, and that's a third of the global assets under management. So it's these drivers that are really bringing ESG to the importance and the prominence to what it is now.
Yeah. Okay. And I think one aspect of ESG, probably people are quite willing to say that they understand a bit about, which would be the environmental aspect, and that makes a lot of sense in a lot of other industries potentially. But with the gambling sector, there might be less of a focus on the E part, but maybe it's the focus on the S and the G, which would be more of interest, or certainly more pertinent to this industry. Elizabeth, could you maybe touch on some of the issues around societal and governance elements of ESG?
Yes, what we just discussed, like sustainability is increasingly everywhere, and it's really our investors or employees or suppliers, like the whole range of stakeholders who have been gaining this more importance. And then we need to look like, what does sustainability mean for your company in specific, and how can we contribute to society in a way that we can limit the negative impacts, but also maximize a positive contribution. And then looking at where we have an impact on society, there's definitely a big weight on the S of the ESG, the social part, because this is where factors like responsible gambling, responsible marketing, like the safe user experience, the consumer health comes to the front, but also more internal social aspects of the company. How do we cater for our employees? How do we recruit and attract and retain them? How do we train them? Diversity and equality. So I think especially for our industry, the S is very important, if not the most important.
Mm. Because I guess that the most obvious area would be is around responsible gambling, clearly, and I suppose we're in a tricky state in a sense, in that the responsible gambling debate across many countries is at different stages of its evolution, one might say. But certainly when it comes to the UK and certainly other parts of maybe Scandinavia, the responsible gambling issue has become much more to the fore. What I was wondering there, Kelly, is to what extent are institutional investors aware that problem gambling is a debate that's going on within the sector, and are they aware of where the industry stands on the issue? That might not be quite so obvious sometimes.
Yeah, look, I think when you're looking at ESG, there's an element of looking at this in a holistic view, and that's across different sectors. So yes, investors are well aware of sort of the complexities and the stigmas around the gaming and gambling sector, and for that reason, the gambling and gaming sector tends to be for the more pure play investors, for example, the impact only investors are likely to put them into like a sin stock bracket. But actually, there's a much broader group of investors, right? So it's not just across the impact only investors. You've got the broader, sort of more committed to sort of financial returns, and the impact is at the opposite end of the scale. So for sure, I think you're going to still see investment into this sector and into this space, and it shouldn't be something that be a reason to avoid sustainability, for example, and sustainability strategies and building them into your business. Responsible gaming is something that I think is really important for investors to get a look at, right? So if you're building a sustainability report, building into how you're attacking or approaching a responsible gaming is really important for investors to see. Now, what they're really keen to see is they don't want to sort of burn and churn the customers. What they want to see is retention of customers and following the game, the journey, etc. And what's important for the investor is actually looking to see that the customer's being taken care of. So this goes back to your previous question that Lisbeth answered on around the social side. It's really, when you look at your stakeholder groups, you need to look at the broad spectrum, and the customers are definitely one of them that investors will be keen to analyse and look into and understand your metrics around that.
And it's interesting that the phrase stakeholders, and I guess I'd like to delve a bit deeper into that, because one element, as you mentioned, is shareholders, and they are an obvious stakeholder in the future of the company. But the other obvious element, and it's been touched on a couple of times already this morning, is your staff, effectively, and the people who are employed by a company. And this has come up in regard to the diversity agenda, for instance. To what extent is that a driver within companies, Elizabeth? What do you find is how does the diversity agenda affect your role, particularly, so for instance, at Aspire Global?
It's very important because the employees, they make up the company. They are the creators. They are the force behind what we produce and how we operate. So if your vision and you stand for recruiting sustainably or with a high level of responsibility in your culture, and you look for employees that really fit in, that is an important aspect when it comes to your people and taking care of your people. So in sustainability reporting, there's a lot of attention to, for example, the gender pay gap, the gender split, the diversity, how diverse is your company, and we do report on that and also set certain metrics on it to go forward in the future. So, yeah.
How would you say that the industry is doing on those kind of metrics? Because I know that in the time that I've been following the sector, the amount of wordage now given over in annual reports to issues around sustainability or ESG or whichever way you want to approach it is certainly much more voluminous, and there's much more being said about it. But how successful are companies along those lines? Maybe Kelly, if you could talk about what maybe has changed with the gambling sector and perceptions of the gambling sector in recent years.
Yeah, I think it's really important to look at the gambling and gaming sector on their evolution and their development. Okay, so there's a number of companies out there that are building sustainability reports, building agendas, and driving the sustainability across the business, and then delivering and disclosing on that. So what we're seeing is a shift in terms of responsible gaming and reporting on your activity, and those perceptions will help change the investors' mindsets. So if you've got a company that's demonstrating that they're greening, if you will, and sort of developing their business towards a more sustainable future, the investors are definitely looking at that from a perspective of investment rather than companies that are not disclosing and not reporting, etc. So the shift in the market is changing for sure, and I would agree that that's the case across sort of gaming, gambling sector, but across all of the capital markets and sectors, because for an investor, it's really important that they see that the company is developing their strategy, and it comes from the top, and it's driven from the top, and it's driven from management.
Yeah, and to add to that, it's not only anymore the annual reports that we report in. A lot of companies, they produce sustainability reports. We produced one that's like 40 pages going into all these topics and setting metrics and KPIs. So you can create more of a transparency towards topics and hold yourself, but also other people can hold you accountable for it, because next year we're going to report and reflect back and set new goals. So this is very important. A topic there what Kelly says too.
And I would encourage
Elizabeth to talk
a little bit more. I would encourage Elizabeth to talk a little bit more about the stakeholder group beyond employees, because I think it's a really important piece for other companies in this sector to look at holistically, because the stakeholder group is broad and the investor community is really interested in how you approach all of them. When you're looking at S&G, which you've mentioned before, Scott, your questions around the importance of S&G beyond environmental. They're looking not only at the staff, but also your clients, but into your government and policy maker contributions, etc. And I think Aspire Global are doing a really good job at getting into their supply chain as well and communicating that. I think that's really important for those who are sort of listening in today to hear about how you look at the broader stakeholder group.
And the point that Kelly made, check, do you have a sustainability committee, and who sits on there? How do you have a board member on it? Are there executive management people on it? The sustainability culture, but also the commitment, needs to be carried from the top. Otherwise, your job or my job isn't working. So this is really great. I report at least quarterly to the sustainability committee, which is 2 board members and 2 execs, and this really gives the push, but also the importance to the goals and the planning we're setting there together.
How difficult is it to ensure that if you have a sustainability agenda at the top level of a company and it's there at the board level, and you're trying your best to give an outward face for what the work you're doing, how important or how tricky is it to make sure that is being sustained throughout the company? Because I'm assuming in a very real sense, in the governance stake, in governance and society side of ESG, it comes down to customer interaction. How do you deal with a customer interaction? And that's going to be at a much lower level than maybe you, Elizabeth, or anybody else at a board level. It's obviously going to be down at the kind of the coalface of in customer interaction. How do you ensure that travels down?
Yes. Totally. I work with so many different stakeholders and business units within the company. Everywhere I have the direct line who is actually responsible for that. So if we as a company can commit to the goals, we can also push the business units for it to gain those goals. And with them, I'm having regular sessions and reporting and really going in depth to the different business units, like how can we improve. And there's, for example, the player sustainability, the player retention, player interaction. That's a very important part, and we have big teams there, and we're working now together with university research too to improve there and be more collaborative with the industry. So I think when we talk about sustainability as a means to a goal, it's really a means to an ever evolving goal. It's not, sustainability is not an end in itself. I think it will always change, and this is how we need to approach it. We should all the time ask ourselves, like, how can we improve this? And I need to leave it up to the experts, but as long as the commitment in the company is there, that's one of the most important parts. And the industry has been evolving. We are not like here for the short term. We're here to stay. And this gives more confidence to companies to look 5 or 10 years ahead instead of just the next quarter and base maybe decisions more on finances than more like the sustainability goals, which needs some investments right now, but they will give back in the long term.
And then just to add to that, actually, Lisbeth, I think back to Scott's question around how can you ensure that sort of sustainability and ESG is driven throughout the whole business. You know, a lot of what we want to see in sustainability reports and research reports, etc., is not only the disclosures but also the building into the operations, because then you've got that concern of greenwashing. Is you can you can talk the talk, but you need to walk the talk. You know, so I think the key is once you've built your sustainability report, or even before, you should certainly be paralleling the build into your operations and across the business and different group areas and geographies. And that's something that, you know, reporting on is really important to be able to demonstrate your materiality around that.
And this, I think, when we speak about environmental, social governance for some topics, it's much easier to put numbers on it or KPIs. And environment has lots of frameworks and structures where you can report to. So maybe this is easy to understand for people too. But when it comes to the social part, it's much harder. There is not an agreed framework. We're kind of like on the way of inventing it ourselves. And we have seen some companies setting like great initiatives on how to measure progress. And I think we'll see that more and more. But also from the investor side, it's harder for them to analyze the risks on the social factor. So when it comes to negative screening, which you just said, maybe that's also part why that is still happening, because it's really difficult to set the framework and have everyone reporting on something that can be analyzed in a similar way.
Yeah. This is a key issue, isn't it, Kelly? Is that in the wider ESG space, we don't simply have a set of rules that everybody can understand and everybody can possibly follow. All the various indexes when it comes to ESG will follow different metrics, and will, you know, often companies that will fall foul of the rules in one according to one screen might not fall foul to another company's screen. So that makes it a harder job. It's a harder target to hit, isn't it? Because it is always moving at the moment.
Yeah, it's a very complex space actually, and you know, companies have got to navigate around not only the different regulations that are coming in that apply, but also the different frameworks that are out there and applicable to their business and their sector, but then also to the indices and the rating agencies. So it is a difficult and complex landscape, but I think, you know, what I would encourage any business right now is to make sure that you are actually in a sort of greening phase. You are identifying it, pick a lane, so to speak, and sort of go down that route. Will there be any sort of structure, like a uniform structure? I mean, that a global structure would be quite impossible, I would say. But in terms of putting I think there's identifying a framework that works for you now. A lot of people are using TCFD, for example, which is much more on the climate side, and SASB, etc. There are many out there for businesses to utilise and to get on board with. But the importance, I think, if I'm looking at it from an investor's perspective, the importance right now is to show that you are identifying frameworks, you are adhering to the new policies and regulations that are coming in, and you are starting your journey and or sort of developed and maturing your journey. So it is a complex space for sure, and that's only going to get much more evolved, you know. So there's going to be more frameworks coming in, there's going to be more regulations coming in, and you know, you can identify this by your sector and what's important, but you know, I think when you look at your ESG, certainly look at all three pillars, not to isolate just E, because obviously a lot of people are trying to align with the Paris Agreement right now. But looking across the S and G as well, the importance of that, the pandemic's definitely shone a light on the S side of the business, and G actually, but the S side of the business, and how you look after your staff and how you look after your supply chain, how you engage with those groups. And provide support across the business, and how remuneration is a really important one as well. And is this felt across the whole business? I think it's really important that we don't look at just one aspect, and that be environmental. And I think that's probably been the driver historically, but for sure in the last 2 years, back to your very first question, Scott, actually, that the reason that there's a prominence now is because there's a light shone on the S and the G for sure. Although I think the governance side of any business, should be the primary driver, and building good governance into your business and transparency around that is, should be at the core of what you do anyway. But obviously now putting some disclosures and metrics around it, it's making companies think in a different way, and divulging that information and being transparent on that.
I want to add to that, like in my job, it's so important to pinpoint at the right topics and the right priority areas. We are making like a metrics, and this is where we can measure the impact and the different stakeholders and pinpoint at the right topics. But it's also very good to work with external agencies who can have a different look at your business to rate how your sustainability strategy looks like, if it's effective, if it corresponds with what investors are actually asking for in meetings, and that kind of knowledge and intelligence is very important to incorporate in your business to tackle the right topics, because sustainability can mean something different for a game studio than an operator, than a B2B business.
Exactly.
Do you think that the pressures from investors, the kind of the general atmosphere around ESG, is that changing the nature of the industry's relationship with transparency?
Yeah, I think the way that the structure's working is a lot of this, like I said, is driven by sort of regulations and policies and governments, but it's also driven by the asset owners, right? So investors have to, they have a duty to respond to the pension funds in terms of what's in their portfolio and how sustainable is their portfolio, and driving the metrics and the disclosures around that so that they can report to their client base. So inevitably it's coming from the top down, so to speak. So yes, you're certainly seeing that pressure come from sort of the asset owners, which will feed into the investors, which will inevitably feed into the companies, and the companies need to sort of in order to stay competitive, and in order to be sort of capital competitive and make sure that you're still in the game, you do need to, as a business, you do need to start thinking about this much more holistically and building your strategy. So for sure that the shift in the market is definitely changing, and the pressure on the investors is then pushed onto the companies, which is where we are now. And sort of how the capital markets is evolving and developing.
Yeah, and I guess a last comment, Elizabeth, but I guess that pressure is only going to increase as the years go by, isn't it?
Yeah, I think this is the good way of having that loop of feedback when in the relation between the company and the shareholders, because they have several opportunities in the year during the AGM or just general by meetings, etc., to share their feedback, to voice what they find important, to vote on how the company goes forward, and this gives a good checks and balances for how we operate.
That's great. Okay, thanks very much, Elizabeth. Thanks very much, Kelly. Appreciate your time. That was a great panel, and hopefully we'll speak soon.
Thanks, you. Really enjoyed.
Thanks, everyone.
Thanks for having us.
Hey, you have Richmond's new phone number?
Yep, it's... Okay. No. I write everything down. I've got this great system, so you hold on 1 second. Let me just find it on my desk somewhere. Well...
You need a customer management tool that's searchable, accurate, and easy to share. You need Salesforce. Hello, bonjour, Kalimera or Kalispera. Welcome. My name is Michael O'Grady, and I want to start today's fireside chat with a big thank you for taking the time to join us today in our session regarding navigating through the recent wave of iGaming uncertainty. As I said, my name is Michael O'Grady. I work at Salesforce. I'm with Salesforce almost 5 years now. Prior to Salesforce, I was with Oracle and SAP. I've been working on digital transformation and driving innovation across multiple businesses for some time now, and become somewhat of a specialist within iGaming and the player experience. Joining me today, I'm delighted to introduce Mariana, or Mariana, I'll let you introduce yourself, who is joining us for this chat.
Thanks, Michael. Hi everyone. Thanks for joining. My name is Mariana. I work with SKS 365 Malta. Well, I've been with the company for 9 years. My position now is, my role is head of online operations. And for the previous 4 years, I've been in charge in one way or another for Salesforce in our company as well.
And in charge
hi,
of
Michael.
me. And in charge of me. Mariana, I haven't seen you in person in a while, so it's I'm delighted to have you here today. So look, the key walkaway that Mariana and I would like to give to the audience today is really how does a platform, or Salesforce in this instance, help you scale your business and navigate through these uncertain times, not just through COVID, but through digital transformations as well, which COVID has been an instigator of speeding up that process that iGaming businesses were going through regardless, but it's just sped up through COVID. So that's the key walkaway. We're going to start off with, Mariana, your introduction to Salesforce, and where you came from as such. What were the systems that are typical in iGaming that you come from before you make the leap of faith into a platform like Salesforce? Can you talk us through that starting journey, please?
Yes, of course. Well, I was actually introduced to Salesforce. I don't even know if you know this, Michael, like years before we started using it, because I was, well, we were using your typical legacy, let's call them legacy systems now. You know, we had a back office to handle the players. We had an email as a channel of communication, and we were literally using an email server for that. I think it was Online Outlook. And then we had the phone and the chat. So that's your standard channels. And they were all over the place. This is very typical. I mean, one back office for the players, you know, for their activities, email, chat was separate, phone was separate. And I was trying to, like, I received the task from my manager back then to try and find like a ticketing solution back then. And I instantly found Salesforce, but unfortunately we couldn't go that way. That was 8 years ago. And then 4 years ago, when the management structure changed in SKS, and my line manager back then was familiar, Anina, she was familiar with Salesforce. And she said, we are doing this. And I was like, please, I want to do this. So I was on board from day
Zero
one,
resistance.
You know? No, zero resistance. I was all for it, because I was, like I said, I already kind of scratched the surface of what Salesforce could do. And I volunteered. I said, please, let me do this. And so I was there from day one. And, you know, we started with Service Cloud. So we wanted just to kind of, we wanted the 360-degree view of the players, which we definitely didn't have. We had, like I said, we had all those legacy systems which were outdated at the time, you know. So we didn't basically have the entire view of the customer, of what they want, you know, how they engage, what the pain points are, what are the strong suits. So we started with Salesforce, with Service Cloud. We did all of those channels in one go. So we integrated the email, we used the web forms, which are a standard, but we didn't have them back then. And then we had chat and we had phone instantly, you know, and the change was I can't even describe it. Let's say it was massive.
Yeah, and I think the biggest compliment to any technology is if users or leadership who have the experience of that technology, they bring it to the next company. And that's what I believe happened with SKS as well, with the success of how Anina and Troy Cox used it in the previous companies. They brought that technology stack or platform through into SKS, which is terrific. And also, like you mentioned, having those siloed channels all come into a single area repository to get that holistic view of your customer. What does that do for SKS in terms of the conversation levels you're having with your customers? How does it impact in a positive?
Well, I think it's safe to say that when we kicked off with Salesforce, we finally knew what the customers want exactly, because I mean, there's no nicer way to say it. When you have the silos, you can't really tell for sure. And then you have everything in one place, and then you have I wasn't even aware of what Salesforce could do for us. Like, even from from every possible view, now our CS agents know what the customers want instantly, because the customer contacts, he can just go to their account, see the history, see how he rated us. Like, for example, back before Salesforce, we didn't have even proper feedback from the customers, which is essential. Yeah, exactly. And it kind of helps you build a profile of a customer, like really build it. You know the history, you know how this customer ticks, where they want to spend their money, what they want to hear from us. If it's something that they don't want to hear, how you can put it there nicely,
Yeah.
And then from a management point of view, which is how I use Salesforce now most of the time, like the multitude of reports and dashboards and everything you can do there, it's amazing. You just have like a clear picture of what the clients want.
And Mariana, you've come on leaps and bounds from 8 years ago to 4 to now. So can you tell the audience, I didn't mention this to you in the build-up, but I'd love to for you to talk through your admin course that you did with Salesforce. So you're actually a Salesforce admin, is that correct?
Yes, I'm a certified admin. Yeah.
You're a trailblazer and a Salesforce advocate.
Okay, so this is interesting because I started learning Salesforce at the same time that that Troy and Anina brought it to the table, and because I liked it instantly. So I was like, let me see if I can learn this tool. And it was, it was great. I mean, the amount of resources that Salesforce offers for admins, so I did it all. I don't want to say it was a no effort thing, but it was kind of seamless, because I was in charge of implementing the tool, of creating our Salesforce org, and then on the go I was learning and doing the trails. There's like this trail mix for certification. I did that. So I followed it, and I passed the exam in my first try, which was kind of cool.
Which is some of our own developers struggle with that. So congrats. But I think being an admin, and not even just being an admin, just going through a lot of those trail mixes and our learning platform and educating yourself on Salesforce. I think the title of this fireside chat today is about the uncertainty in iGaming, and SKS has certainly been hit. Planet Win has been hit with challenges. You've got the retail element to your business, and you've been able to pivot. And I think with your certification and understanding of the breadth of the Salesforce platform, that has helped SKS to some degree. That would be my opinion, but can you articulate a bit further on how Salesforce has navigated through kind of the shops closing with COVID to driving more online, responsible gambling, and how you're navigating through these kind of forced changes on your business?
Yeah, I mean, the good thing is we've had Salesforce for 2 years, I think, when COVID hit. So we were already familiar with the tool. Everybody was. And it's, the good thing with Salesforce, you can take it with you. So when we switched to home working, it was easy to access for our guys. And, that's a good thing. And I mean, yeah, like you said, we had to focus the majority of our resources to online, of course, which has, of course, went through the roof. We had a lot of contacts coming in, but we were able to scale those because we could easily reassign the tasks, to guys who were doing retail work, could help out with online, and then we could see what the players wanted because we really did have a big spike of contacts, which I'm happy about, to be honest.
Yes.
Yeah, that's a good sign. So we were able to quickly identify what the customers want, and kind of target that and address that. And like, for example, we used, because we're not using Service Cloud alone. Like, this is where we kicked off. We are now using Marketing Cloud and Field Service and communities. So like, for example, when the pandemic struck, we were able to send out newsletters to our players from Marketing Cloud, just to, not to even try and sell them anything, just to engage with them, to let them know what's happening, what's new, and that was a big hit, to be honest. Players like that a lot.
Absolutely. I love the way you reference the mobility, because Salesforce is a mobile first, and the irony is that Salesforce was ready for a work from home, or what we call a work from anywhere environment. So it kind of it fed into what Salesforce has kind of been promoting about the ability to take your customer information, work from a cafe, from your house, from an office, or wherever you so choose, and have the ability to access that securely, of course. And security is paramount. So I would like to get into, I use this tagline, Mariana, a lot about when you buy Salesforce, it's just not like a similar, I think we've differentiated already that it's not a modular application. It's not just a ticketing tool. You've grown it far exceeding your first expectations. But from the tagline I use is, you're not buying technology, you're actually buying compliance. As you dig deeper into that customer profile and you understand what their complaint will be or the ticket will be, and you understand what promotion they want to receive through your bonus engine, because we know Michael O'Grady loves Lazio or AC Milan, and he bets at this time, and you can deliver the right message right time. But it's about that responsibility of SKS, and you're responsible gamblers, and the compliance of money laundering and whatnot. So can you talk to how it's helped you in that capacity as well for compliance, please?
Yes, of course. I mean, it gives you, because now it starts with the tool. Like, Salesforce gives the visibility. You know what the customer is calling about. And then it made it also easier for us to train our agents to recognize a potential problem with a client or with the compliancy. And then we can easily identify and take proper actions with those players, because you have every information there. They don't even, it's very easy to identify it. Like I said, at the beginning, we have the history and we have the behavior all in one place. So it's definitely helped us with
and the
that
right to be forgotten and things like this. Exactly. Look, I want to wrap up really by quickly just thanking you, Mariana, for being the trailblazer, for being a Salesforce advocate. It's been a long journey to now, and I know you're passionate about Salesforce, so it's a bit biased today. But
probably, yes.
I really appreciate your time, and value you as a trailblazer and customer. So thank you so much, and I look forward to catching up with you face to face.
Thanks, Michael. This was fun. Thank you.
Ciao.
Bye.
Ideas start with an impulse, a desire of a notion. That unstoppable urge to create something extraordinary. Your project started. iPoint International. Ideas start with an impulse, a desire of a notion. That unstoppable urge to create something extraordinary. Your project started. iPoint International. Ideas start with an impulse, a desire of a notion. That unstoppable urge to create something extraordinary. Your project started. iPoint International.
Hi everyone, and welcome to the perhaps most anticipated panel of the conference, and also the panel with the most revealing topic that at least I have ever moderated. It's called Mistakes, Fuck-Ups, and Thriving as a Leader. And as you understand from the title, this panel is all about looking at our mistakes and perhaps insecurities and what, if anything, we have learned from them, but also how the panelists have developed as leaders through it. For the ones that don't know me, my name is Lasse Mertzog and I'm the CEO of BetPoint Group. BetPoint Group is an extremely fast-growing operator with some of the most talented and hardworking people I have ever met. So keep an eye out for us because you'll be hearing a lot from us the coming period. When I started planning for this panel, I quickly realized who my two dream candidates were. And that very same morning when I accepted to moderate the panel, I jumped on a call with Jesper and wrote to Oscar right away. And they both accepted immediately, which I'm very, very glad for. And my two panelists that I have with me today are not only industry veterans and great leaders, but they're also friends of mine, which I hope will help in getting them to be extra honest and open with us today. I think most of you know them and that they don't require much of an introduction, but I will let them say a few words about themselves before we get started. Jesper, do you want to start?
Okay, thanks, Lassen. So I'm Jesper. I'm the CEO for Betsson Group, and I'm sitting here in the sunny Malta today, just like you. Happy to be on this panel. Looking forward to what questions you will put forward.
Oscar?
All right. Yeah, thanks, Lassen. I'm not sure if I'm supposed to be honored or scared when I was the first one you thought about, considering the topic of today. But yeah, my name is Oscar Milback. I'm the group CEO at RakeTech, and we help iGaming operators get more marketing buck, more buck for their marketing money, more bang for the buck, basically, for the marketing spend.
Nice. We only have 30 minutes today, and I have a ton of questions that I want to ask you guys, because I have both sat in panels with you and moderated some where you have taken part. And I must say, both of you always look so very calm. Are you guys ever nervous in your job as CEO and being the face outwards for a company in, for example, these panel debates? And if yes, do you have any good tips for the listeners on how to handle it? Oscar?
Yeah, sure, Lassen. I'm actually always quite nervous when it comes to public speaking or any public address, and it's just something I think is very natural. It's a human sort of reflex of being nervous standing in front of people. I think people that are not nervous most likely. Yeah, well, there's probably something wrong with them. I think it's the most natural reaction in the world, but something you have to also learn how to live with. And I think just like anything else in life, which makes you nervous, like love or going in a roller coaster, it's also very, very rewarding to overcome that fear and do these things that makes you nervous. And I don't think there are any. Well, the only tip I can potentially give is that I'm when there's something that I'm a bit nervous about, I make sure to be there in time. I put some really good music. Sometimes, depending on what it is, it could be AC/DC or it could be Bob Marley. Depends on what it is, and I make sure I come in a good mood, and then I try to enjoy it just like a roller coaster instead of just being scared to death. But yeah, don't really have any good tip besides from that.
That's a good tip, I think. Jesper, what do you say? Are you ever nervous?
Yeah, yes, of course. But I see it very much for anyone who has been in the sports world, know what it means when you're going to go and play a big match, for example. And it's nervousness, but it's a lot of anticipation many times. And I think one tip is not to think too much about it, because if you start to think about what you're going to do, you can lock yourself down a little bit. So try to go with the flow, and when you play a match, you're in the match and you're playing and you don't think about anything else in that sense. So don't prepare, but don't over prepare. That's my little tip.
Yeah, I also agree. I mean, I think that a bit of being nervous, it actually keep you focused and on the edge. So I think it's good in many occasions.
It is.
Entering new markets with different regulations and consumer trends is always a challenging process. Can you give an example of mistakes you perhaps made when entering a market or tried to gain market shares in any new jurisdictions? Jesper, you must have some examples here.
Yeah, we have failed a lot, I was going to say. But, I think we are in many markets today. And the most common mistake that has happened is that as a company, you want too much too fast. It's a long-term game in the markets that you enter. And you get very excited when you go into a new market, and of course you want to see numbers quick and good traction and so forth. And there have been times I can give one example is Italy, where we're doing good today, but in 2013, I believe it was when we entered that market, was so excited about the sheer size of the market and the opportunity. It was a big marketing budget, a lot of TV spend, and we really thought we could take a strong position. And when the budget was over, there was no real business. We had went out way too hard. So that was costly, and it also helped us then to understand that you need to learn the market. You need to understand what is working in the specific market to build up your digital channels before you go full out above the line and so forth. So I think that was actually a great learning for a lot of the other markets we have entered, and helped us to be more balanced nowadays. But it's hard sometimes because obviously you're ambitious, you want to go in, you want to win in that market, and it can be easy to be a little bit carried away in that sense, and that's human, I think. But for us, it has happened a few times.
Don't you think many listed operators are also a bit too careful nowadays? They almost try to cost control while trying to grab market shares because the market is just expecting double-digit growth or anything.
Yeah, I think so as well. But when you get to a point where you can be comfortable with your spend, and you can spend a lot as long as you see that the right KPIs are moving in the right direction, then it's very much justifiable, and it's also explainable when that happens. The problem is, of course, when you spend a lot and the growth is not coming. That's very difficult. That's very difficult because then you're doing something wrong. So you can still be ambitious, but you need to make sure that the totality of what you're doing is bringing you in the right way. And if you explain that well, everyone will understand, and it's a good way to gain market share. That's how you do. When you have traction, you need to keep fueling it.
Yeah. Thank you. Oscar, you've been both on the operator side and on the now affiliate side. Do you have any good examples?
Yeah, well, I totally agree with Jesper on all his learnings, and I think all of us have done basically the same mistakes, but maybe from my time in e-commerce, I could share another learning, which would be more of maybe sometimes looking a little bit too much on the market potential in absolute terms, and it sounds like a very junior mistake to do, but it's quite common to do that, and we often look at the American companies coming into Europe, for instance, and they look at Europe as a whole, and then they identify Germany and France, and then they go all out, and they don't really understand the markets, and they get burnt basically. And I think maybe some of us is doing exactly the same in the US at the moment, seeing that as one market. I think there are many markets that are very, very different culture-wise and payment methods, and there are lots of stuff differing. So from my e-commerce time, we did that quite a few times actually, and it took us many times before we learned the lesson. And then eventually we focused on smaller markets where we could learn much more about the market, about the very specific things that were needed, and then with smaller budget make a bigger impact, and then come over that tipping point where we then would sort of own the market, and that's where the margins come. So for us, that was super successful back in those days.
Agreed. Good tips, all of it. Yeah. Next question is about good and bad leadership in general, and I have seen some really good ones, but also some horrible examples. A bad one I heard about was actually here in Malta, but not in our industry. A very close friend of mine worked for a retail chain. I'm not going to mention which one. And every year when one of the two owners had his birthday, the other owner collected money for his birthday gift from all the employees. And this is quite a sizable company. And every year he bought him a gift voucher for all the money at their own shop. And if you were to ever question this setup, you were actually risking losing your job. But do you believe the iGaming industry is modern when it comes to leadership, or do you think anything is missing, Oscar?
Well, I think it's modern in the way that we're a new industry. We haven't been around for ages, so I think we're all still struggling a little bit with trying to find the ground. But I think we're modern in the sense that we're new and that we're super international. We have lots of diversity in our companies. But something that I miss a little bit from also coming back from my time within e-commerce is sometimes passion for what we're doing, if you can say that, if someone can relate. But I think we talk maybe not so much about the value we bring to our users, our customers, or the value, what differs our offering from others so much, which I think, at least from my perspective, when the leaders I think about that have inspired me are leaders that have really managed to get their vision through about what are we going to achieve and why do we exist, what value do we bring to the table. And that's something I think not so many leaders in this industry talks about. We talk about value to the shareholders perhaps, but that is the effect of bringing value to our users first and foremost. Then the value to the shareholders will come. So that's something I personally miss a little bit in our industry.
Yeah, thank you, Oscar. Jesper, what do you think? Are we modern?
It's a very good point you're making there, Oscar, because we speak too little about that, and I don't think the industry has come together strongly enough either to commonly drive an agenda like that. Although it's starting to happen a little bit more with trade associations and so forth. But that is also because we are quite a young industry, and I think we are a digital industry. So I think iGaming in general is modern, and of course there's probably a difference here between online and offline in our industry. The offline industry can perhaps not always be on the same digital level as the pure digital companies are, of course. But we are diverse. We have, even in Betsson, we have 60 different nationalities. We are roughly 40% women and so forth. So it's a good diversity, and that is what I consider to be modern. And digital leadership is a modern space as well, though. So I think we are looking a lot at the right type of companies when we are trying to be better. We look at e-commerce companies. We understand that there are a range of companies that set the digital standard, and if we don't understand that, our businesses will not succeed either, though. So from that point of view, we are modern, but in a young industry, we could do much more as an industry to drive a common agenda. We are in the business of buying